Hello, I'm Marion Barkas. Today I'm interviewing Mayor Dale Adams and City Administrator Tom Pagel about the proposed Grand Rapids City sales tax of 1%. The referendum is scheduled for November 4th. It'll be part of the general election, and we want to make sure that all of the residents of the city have an opportunity to learn about this possibility before the election process. So let's start by talking about just what a local sales tax is and what sorts of items are subject to this tax.
Well, first of all, thank you for interviewing us today. When it comes to a local sales tax, the state legislature allows communities to implement local sales tax for public infrastructure typically. And it's really a two-part approval process. One is the city has to go to their voters and they have to specify how much the local sales tax would be and what it would be used for. And then the voters need to approve that referendum question. And then the city has to go down to the state and get approval from the state legislature. There's probably around 20 to 30 communities throughout the state that have local sales taxes. They're used for various things from wastewater treatment plants to walking trails to parks. So that's really the background behind the local sales tax.
Okay. We may come back to some of those aspects that you've described as we proceed. So this is a 1% sales tax, and it would become part of the normal sales tax process that's right now the state sales tax. Is that correct?
Correct.
So when you go into a store to buy something, it would be automatically included in that total tax purchase.
Same as it is in Duluth or the Baxter area, Owatonna, any community, Cloquet, that has a sales tax. The state sets that up, and what they do is they have a kind of a one-time, an initial, where they go in and they set it up on the machines, what is allowed, what isn't allowed, and then from that point on, anytime a resident or a non-resident would go into a shop, buy something, it calculates out, now is this a taxable item? Yep, okay, that gets the sales tax on it. If it isn't, then it won't show up with the additional 1%.
Okay.
Typical items would be anything normally taxed, the state sales tax, with the exception of new and used vehicles. Those would not be charged a local sales tax. Gasoline would not be charged a local sales tax. And those are the two biggest questions we get quite often is, which would a vehicle be subject to sales tax on the local side? No.
Okay. Do you know about things like utilities, propane, fuel oil, natural gas, or would those be taxed?
I don't believe they are. Yeah. If someone's really interested, the Minnesota Department of Revenue has fact sheets online at their website. Fact sheet number 164 has a lot of information on what is and what isn't. Or you can go to our City of Grand Rapids website, and we have a local sales tax page where you can get that fact sheet and a lot of questions and answers.
Thanks, Tom. So how long does this sales tax last once it goes into effect, if it does?
Well, it follows our CIP, which is our capital improvement plan, and that's a 5-year plan that we put in place. So if this sales tax would be successful through the referendum and successful at the legislature, we expect that it would go in place in 2016 and run through 2020.
All right. So what happens after it expires?
Most communities have gone back out to their residents and asked for extensions. Do you believe that it was a good thing? I don't know that I've heard of any community that after they've had it in place, if they've had a need, that it's been turned down the second time. They've usually stamped it again for approval for an extension of the 5-year tax.
Okay.
I think important to add on there, if it's approved by the voters, right now it's 1%. The City Council can't increase it. They can't decrease it. It has to stay at 1% for the 5-year duration. And then at the end of 5 years, it goes away unless, like Mayor Adams mentioned, the voters reauthorize
agree to
it.
extend it.
Yeah.
Okay. So I imagine this is going to be a fairly controversial issue, and no doubt the city has considered this for some time. Can you talk a little bit about the decision-making process that you've been through?
Sure. As we've looked, and I'm finishing out my 8th year on the council, and from the time that I got on the council, cost of city government has been a primary driver, trying to hold those costs down to the extent we did, a 10% reduction in staff. We've looked at a lot of different things and ways that we can hold costs down. Whether people agree or disagree with the way we've done it is certainly their right. But as we started looking forward, we said, the worst time you can ever have is when you're sitting there at an assessment meeting, and Tom, as the former city engineer, said the worst thing you can do is go out and put assessments on folks. Now, that's a tough pill to swallow, because going into a meeting that you're going to vote to improve from an infrastructure standpoint. You're going to vote to approve a road project or something that you've already had in your CIP plan. The road is deteriorated to the point that it needs work. And you got people that are there and they're asking, why? How can I afford this? This is an option that's going to give us the opportunity to take 55% is what we estimate that the cost of that project would be covered through the local sales tax. It allows the city residents to have support on their side from the standpoint of they're not footing the full bill anymore, whether it's the use of the library or the use of the arenas or just the streets for people to get in and around. Those costs take maintenance, and there's constant maintenance on our city infrastructure, and to have 100% of that burden bore by the residents within inside the city limits, if there was a better way, we were looking for it. We believe as a city council unanimously that this is a better way, that we can get support from residents outside and tourists as they're traveling through, as other communities. As I go around the state and I travel, my wife and I travel a lot, I don't pay one bit of attention when we purchase something in the city of Duluth, that there's a tax on there. We get our bill and you pay it, and it's on there. So I'm expecting and hoping that the residents see the benefits and that the non-residents see the benefits as well, that they're going to help support something that they have an opportunity to use every day as well.
I think one thing we hear in those public hearings is people would rather pay a little bit versus getting a special assessment bill, a huge assessment bill every once in a while. In addition to that, as the mayor had mentioned, the University of Minnesota estimates 55% of the revenue would come from non-residents. So when it comes back to your question of how do people feel about this, when we sit down with residents in focus groups, they like the concept because they realize, oh geez, 55% of the project cost would be covered by non-residents. Now, when we're in meetings and there are non-residents, we've heard from the non-residents that they don't like it. I think that's natural. People like to use something and not pay for it.
But I would say that even the non-residents, once they understand what we're doing, a lot of them say, okay, I understand that. And I can support that. They might not be happy, but they acknowledge that they can support it and they see where the city is going. The biggest question then comes, as we will answer, throughout the show here, is that are you sure that that's where this money is going to go? And as Tom said, that is absolutely where the money has to, and that's the only place that it can go, is for those infrastructure projects.
We'll be audited by the Department of Revenue on an annual basis to ensure that the revenue that was generated there went specifically to the infrastructure, the street and street infrastructure projects in the capital improvement plan.
Okay. So you mentioned assessments and special assessments. Right now, some of these projects are funded through that process. Are there other ways that these projects are funded now?
Well, right now we really only have one method of funding projects, and that's through local levy. And what the city does is we issue bonds, and when we issue bonds we have to specially assess. So right now 100% of the project costs are covered through taxes, property taxes. when you look at alternative methods, you know, we're really limited. We're limited to that levy, and do we continue to increase the levy to pay for streets, or can we go to this local sales tax, pay cash, eliminate interest that we're paying on the bonds, and we've estimated at a minimum we'll save at least $4 million in interest on those 5-year issuance of bonds. And as a result of that, getting some of our existing debt service paid off, we'll see property tax decreases in the city because we're not paying interest on the bonds, we're getting our existing debt service paid off, and it's just that would be a positive for the city as we move forward.
So the 1% proposed sales tax to be used for street reconstruction and overlay projects specifically would reduce the city property tax. Have you seen that happen in other cities that have the use of the sales tax to offset these road projects and street projects?
Well, let's start with Brainerd and Baxter have a local sales tax, and that's specifically for the cost of a wastewater treatment plant that they jointly constructed. What that did for them is it allowed them to keep their sewer rates down as a result of building that wastewater treatment plant. City of Cloquet recently passed a local sales tax for bike trails. Well, in lieu of increasing the levy, which increases property taxes, they're able to pay for those bike trail improvements with the local sales tax. So it did keep their city property tax down. City of Hutchinson ended up issuing debt service for a new water and wastewater treatment facility. They ended up not seeing the growth in industrial commercial that they were projecting because of the recession. Went to the legislature, was able to get a local sales tax and help pay off those bonds to keep their sewer and water rates down. So it varies from city to city, but you know, back to the first point is really cities are limited. They're limited to either property taxes to pay for this or trying to get a local sales tax to help pay for the improvements.
And one thing we do know, Marion, is that if something isn't done, knowing the state of what we need to do from a construction standpoint on our streets throughout the city, with 93 miles of roads in the city, it takes a fair amount of work. Now, people will ask, well, why can't you just put it off? Well, you certainly could do that, but at some point in time you get where you cannot put it off anymore, and things that you've put off then become more costly. The cost is not going to get better. It will only get worse, because if you do an overlay when it needs it versus a total reconstruct, it just makes sense that the overlay is going to be less. So we know that if we do nothing, that our tax rate is going to continue to have to rise. You know, and what I look at, one of the things that I look at when we go through our budgeting process is where are we at? What's our city tax rate? Is that manageable on a $100,000 home? If our tax rate is 69, that means that you'd pay $690 of property taxes, you know, on a $100,000 home. We know that going out into the future, if we continue to operate the way that we currently are, that tax rate could go up over 100, which would mean you'd be paying $1,000 on a $100,000 home. We have run projections that show that if we put this in place over that same period of time, that tax rate, instead of moving up to that 101, would actually go down around the 75. So that tells me that there will be a long-term stabilization, if not reduction, in what our property tax would end up being based on tax rate projections.